Hello everyone, welcome back to our CA Final Law Revision series. Firstly, I would like to thank CA Ravi Agarwal sir for taking this initiative of starting the video series of revision lectures. Also, I hope you have liked my first video. If you like my videos, do like and share the videos and subscribe to this channel for more updates. Leave a comment in the comment box below to let us know your views. In the first revision lecture, we revised the chapter Appointment and Qualification of Directors, that is section 149 to section 172. Today, we'll revise Meeting of Board and its power, read with Companies Meeting of Board and its Powers Rules 2014. It is chapter 12 of Companies Act 2013. Sections 173 to section 195 contains the provisions relating to meeting of boards and its power. The form is MBP. Now this chapter will revise by dividing it into 6 parts. That is, first is meeting of board, second is powers of board, third is committee of boards, fourth is loans and investments, fifth is related parties, and the next is others. Now first section we'll look into is section 173, that is meeting of board. Now first we'll divide the section into 3 parts, that is section 173 subsection 1 and section 173 subsection 5, which deals with frequency of board meeting. The next is section 173 subsection 2, read with rule 3, read with rule 4. We'll see mode of board meetings. Then next is section 173 subsection 3, that gives us procedure of board meeting. Now first we'll see is frequency of board meetings. First is section 173 subsection 1. It states that the first board meeting shall be conducted within 30 days from the date of incorporation. Then minimum 4 board meetings shall be held every calendar year, having maximum gap of 120 days. Then, according to MCA clarification, Section 8 company shall hold at least one board meeting within every 6 calendar months. Now, Section 173, subsection 5 states that OPC, small company, dormant company, and private company, which is a startup, shall hold at least one board meeting in each half of the calendar year. The gap between the 2 board meetings shall be 90 days. But this exemption shall not be available to private company which is startup in case of default in filing the financial statement and or annual return. The next is mode of board meetings. That is, it states that the directors can participate either personally or through video conferencing or by other audiovisual means. Now, the Rule 4 states that there are 5 matters which are not to be dealt through video conferencing or by audiovisual means. That is, the director should be personally present in the board meeting to vote on these 5 matters. Let's see the matters. The first is approval of financial statement. Second is approval of board report. Third is approval of prospectus. Fourth is approval of matters relating to amalgamation, merger, demerger, acquisition, and turnover. And the fifth is audit committee meetings for consideration of financial statement, including consolidated financial statement. Now, in case of video conferencing, Rule 3 states that director participating through video conferencing is counted in the quorum. But the exception is Rule 4. That is, if the director is participating through video conferencing to vote On these 5 matters which are stated in Rule 4, then he shall not be counted in the quorum. The next point states that a chairperson shall take the roll call of the directors participating through video conferencing or audiovisual means, stating the name and location of the director. Then the next point is that the draft minutes of the meeting shall be prepared and circulated within 15 days in writing or in electronic mode. The next section is section 173 subsection 3, that is procedure of board meeting. The first point states that the notice shall be given to all the directors minimum 7 days before the board meeting at its registered address and by hand delivery, post or electronic mode. The courier mode is not allowed in case of notice of board meeting. After the notice, the board meeting shall be convened and the board resolution will be passed at the duly convened board meeting. Now, this point states that minimum 7 days before the board meeting, a notice shall be given. But to transact the urgent business, a shorter notice can be allowed. But the condition states that at least one independent director shall be present in the board meeting, which is called at shorter notice. And in case of absence of independent director, the decision taken at the board meeting shall be circulated to all the directors and ratified by at least one independent director, if any. But in case if the section 149 subsection 4, that is the section of independent director, is not applicable to the company, then majority directors may convene the meeting. Then the next point is notice of board meeting is a statutory obligation of the company. That is, the company has to statutorily send the notice of board meeting to the directors. In case of omission to give the notice of board meetings to any of the director, it shall be voidable at the option of concerned directors. And the failure to give the notice, every officer shall be penalized rupees 25,000. That the next section is section 174, quorum of board meeting. We'll divide it into 3 parts again. The first will be section 174 subsection 1, section 174 subsection 3 and section 174 subsection 4. 174 subsection 1 states that the quorum will be 1/3 of the total strength or 2 directors, whichever is higher. But the quorum in case of section 8 company shall be 8 members or 25% of total strength, whichever is less. In case of the first limit, it was higher, whichever is higher, and now in case of section 8, it is whichever is less. But minimum 2 members shall be present for quorum in case of section 8 company. Now, the next point is section 174 subsection 3, that is interested directors. If the interested directors exceeds, that is, it is at least 2/3 or more than 2/3 of the total strength, then the quorum should be number of directors who are not interested directors and present, but it should not be less than 2. That is, if in any meeting the interested directors exceed 2/3 or is exact 2/3 of the total strength, then the quorum shall be the directors who are not interested directors and are present. But minimum it should be 2. Okay. In case of private company, interested director may also be counted in the quorum. Then all interested director appointed under section 161 subsection 1. If all are interested directors, then the company shall appoint under section 161, that is, it shall appoint additional directors to vote on that matter. Then the next point is section 174, subsection 4. That is, if the board meeting is not held due to want of quorum, then it shall be adjourned to the same day, same time and place in the next week. But if that day is national holiday, then the succeeding day. The notice resolution passed at this adjourned meeting shall not be taken to be passed as at the date of the meeting originally began. That is, it shall be taken as a date on which it is passed and not the original date of meeting. Now, what will be included in total strength? Will include directors appointed under section 161, that is, director appointed by board of directors, then rotational directors, then non-rotational directors appointed by central government, then whole-time directors, then managing directors, then independent directors and interested directors. Now the next section we'll see is section 175, that is resolution by circulation. It states that a draft resolution plus necessary papers shall be circulated to all the directors or members of the committee at the registered address in India by hand delivery, by post, by electronic mode and by courier. Now note this point. In notice of board meeting, courier option was not available, but for resolution by circulation, courier option is available. Now, this resolution, draft resolution, shall be approved by majority of directors or members who are entitled to vote on resolution. Who are entitled to vote on resolution shall approve. Okay. Then if if the minimum one-third of the total number of directors required that a resolution must be decided at meeting, that the board meeting shall be convened. Then the next point is resolution. This resolution under section 175 shall be noted at subsequent meeting and made part of the made part of the minutes of such meetings. Then interested directors are not entitled to vote. Till now, we covered sections related to meetings of board, that is section 173, 174 and 175. Now we shall see the sections related to powers of board. The next section is section 176. It states that no acts done by a person as a director shall be deemed to be invalid if subsequently it is noticed that his appointment was invalid or by a reason of defect or disqualification or terminated by virtue of in short, section 176 states that defects in appointment of directors does not invalidate the actions taken, but after noticing the defects in his appointment, no act shall be valid. That is, after the defects coming to the notice of the company, the act done letter shall not be valid. The next point, the next section we'll see is section 179, that is powers of board. Now, section 179 states that the board of directors is entitled to exercise the same powers as the company is authorized, but subject to the provisions of the act. Then the second point states that exception to the board powers. The exception states that the board cannot exercise the power in these four cases. That is, there is a deadlock in board of directors. Then second is number of directors falls below the statutory limit. The third is board of directors become incompetent. And the fourth is board of directors act against the interest of the company. Then the next point states that the no regulation shall have retrospective effect, that it will not validate and invalidate any prior act. Now, what are the powers of board? Powers of board are to make calls on shareholders in respect of unpaid shares. The next is to authorize buyback of securities. Next is issue securities. Next, borrow monies. The next is invest the funds. Then grant loans or give guarantees or provide securities. Next is approve financial statements and board reports. Next, diversify the business. Next is to approve amalgamation, merger or reconstruction. And the next is takeover of a company or acquire or controlling or substantial stake in another company. Now, in case of borrow monies, investing funds, and granting loans, these three may be done by resolution by circulation in case of Section 8 companies. Now, the next point states that more powers that shall also be exercised by the board of directors only by means of resolution passed at meetings of board. That is, board resolution is required to be passed at board meetings to make political contribution, appoint or remove KMP, and the next third is appoint internal auditors and secretarial auditors. Now, this point we have seen. Now, in case of power D, E, and F, that is borrow monies, in case of invest funds, and in case of grant loans or provide securities, the board may delegate the power to committees of directors, managing directors, manager, and principal officer of the branch. The next point is Section 180. Now we shall look into Section 180, that is restrictions on power of board. This section is not applicable to private companies. Now we'll see one by one the points, that is restrictions on powers of board. The first restriction is to sell, lease, or otherwise dispose of wholly or substantially the whole of the undertaking of the company. Now, the board has to pass special resolution to sell, lease, or otherwise dispose of the whole or substantially the whole of the undertaking of the company. Now, what is an undertaking? Undertaking is where the investment of company exceeds 20% of its net worth, or an undertaking which generates 20% of the total income of the company. Now, what is substantially the whole of the undertaking? It means 20% or more value of the undertaking as per the last audited balance sheet. Now, the special resolution may specify the use, disposal, or investments of the sale proceed from this sale, lease, or otherwise disposed. Now, the next point is this sell lease does not affect the title of buyer in good faith, that and also it can be covered in ordinary course of business. The next point is to invest otherwise in trust securities the amount of compensation received by it as a result of any merger or amalgamation. The next point is to borrow money. To borrow money, where the money to be borrowed together with the money already borrowed by the company, that is borrowed or to be borrowed, exceed paid up share capital plus free reserve plus security premium, then the company has to pass the special resolution if this exceeds. Okay. And then the next point states that this borrowings does not include temporary loans. That is, temporary loans are which are of less than 6 months. The term is less than 6 months. Now, In case the company exceeds this limit and the act is not valid or effectual, but the lender proves that it is in a good faith and without knowledge, then it cannot be invalidated. Okay. Then the next point states the special resolution may specify the amount up to which the monies may be borrowed. And the fourth point is settlement of amount, that is to remit or give time for repayment of any debt due from the director. Let's revise this 4 point again. The special resolution shall be required if the board want to exercise the powers. First is to sell, lease or otherwise dispose of the whole or substantially the whole of the undertaking of the company. Next is invest, otherwise in trust securities, the compensation received. The next is to borrow money if it is excess of limit. Then the next is settlement of amount, that is to remit or give time for repayment. In case of sale, lease or dispose of the undertaking, it shall not be deemed to authorize the company to effect any reduction in its capital. Next, we'll see section 181, that is company to contribute to bona fide or charitable funds. The prior permission of company in general meeting is required. Then if the contribution amount in aggregate exceeds 5% of average net profit of 3 immediately preceding financial year, that is permission in general meeting shall be required if the contribution exceeds 5% of average net profit of 3 immediately preceding financial year. Then it does not make it mandatory for a company to have a profit for making a charitable contribution in the financial year. Then the next section is section 182, that is political contribution. Now, what this section states that the companies are not allowed, that is the government company or the company which has been in existence for less than 3 financial years are not allowed to contribute to any political party. The next is a resolution authorizing the making of such contribution is passed at the meeting of board of directors. That is, a board resolution passed at the duly convened board meeting shall be required for making the political contribution. Then the amount contributed shall be disclosed in its profit and loss account. Then the next is the mode of contribution shall be account pay check or account pay draft or electronic clearing system through bank. Then the company may make a contribution through any instrument if it is in scheme notified. Then in case of contravention of this section, the fine shall be company has to pay 5 times the amount so contributed, and every officer in default shall be liable to imprisonment up to 6 months and fine, that is 5 times the amount contributed. Now, in case of electoral trust company, it is not required to make the disclosure under section 182. It will be sufficient if it is disclosed in the accounts of the company. Now, the next point is section 183, which deals with power of board and other person to make a contribution to National Defence Fund. The company can contribute such amount as it deems fit. Till now, we have seen 3 contributions. The first was to the National Defence Fund, then political contribution, and the contribution made bona fide and charitable funds. So here we complete the part of powers of board. We completed section 176 and section 179 to section 183. Now we'll revise the committees. that is section 177 and section 178. Now first we'll see section 177, that is audit committee. Now who shall form a audit committee? The limit is same as independent director. It is same, this limit is same for audit committee and nomination and remuneration committee. We'll see the limit. First, the formation of audit committee. Who shall form the audit committee is every listed company and other public company fulfilling the top criteria. Remember the top criteria from our first lecture. T for turnover, 100 crores or more. O for other outstanding loans, borrowings, debentures, deposit exceeding 50 crores, and P for paid up share capital of 10 crores or more. Now, in this section 177, we'll see audit committee and visual mechanism. Now, first, what is the composition of audit committee? So, minimum 3 directors, independent director forming the majority. This point we have seen in section 149, that independent director shall form the majority of audit committee. Then the next, now, in case the independent director should form the majority is not applicable to Section 8 companies. Now, disclosure of composition of audit committee shall be made in the board report. And in case the board has not accepted any recommendation of audit committee, then the same shall be disclosed. Now we'll see the responsibilities of audit committee. First is recommendation for appointment, remuneration and terms of auditors. Then in case of government companies, recommendation for appointment, remuneration and terms of appointment shall be substituted with recommendation for remuneration. Then the next responsibility is to review and monitor auditors' independence and performance and effectiveness of audit process. Next is examination of financial statement and auditor's report. And the next is approval or any subsequent modification of transaction of the company with related parties, that is related party transaction. Now, this point, it states that provided the audit committee may make a omnibus approval for related party transaction, that is one-time approval for the related party transaction. Now, in case the transaction is other than 188 and audit committee does not approve, then it shall make a recommendation to the board. Then any transaction not exceeding rupees 1 crore without the approval of audit committee and not ratified by the audit committee within 3 months shall be voidable at the option of audit committee, and the transactions with the related party of director or authorized by the other director shall indemnify to the company. That is, this director uh, who has entered the transaction with the related party shall indemnify to the company. Now, this provisions is applicable only in case the transaction is under section 188. That is, this third value provision is applicable only in case the transaction is under section 188 and between holding and wholly owned subsidiary. Then the next point in responsibility is scrutiny of intercorporate loans and investment. Next is valuation of undertakings or asset. Next, evaluation of internal financial controls and risk management. And the last is monitoring the end use of funds raised through public offers. Now, what are the rights of audit committee? It is to empower for calls for the comment of auditors about internal control system, then scope of audit including the observation of auditor and review of financial statement before their submission to board, then to empower to discuss any related issues with internal and statutory auditor, then empowered to the management of the company. And the next right of the audit committee is to investigation by audit committee. That is, there are basically two rights, that is to empower and to investigate. The next point states that the auditor of the company and the key managerial person shall have right to be heard in the meetings of the audit committee, but shall not have the right to vote. Next we'll see is visual mechanism. Now, which companies have to have shall form a visual mechanism. It is listed company and all other company who accepts the deposit from public or borrowed money from banks and public financial institution in excess of 50 crores. Then the next is, what is the objective of visual mechanism? Visual mechanism is formed for directors and employees to report genuine concerns. Then second, for adequate safeguards against victimization of persons. And third, to have direct access to the chairperson. Now, we'll see next is section 178, which contains the provisions related to nomination and remuneration committees and stakeholders relationship committee. Now we'll see two committees in section 178, that is nomination and remuneration committee and stakeholder relationship committee. This section is not applicable to section 8 companies. Now the next is nomination and remuneration committee formation. The limits are same as audit committee, that is every listed company and every other public company fulfilling the top criteria. Now, what is the composition of nomination and remuneration committee? It is minimum 3 non-executive director. The committee shall consist of minimum 3 non-executive directors and not less than half shall be independent director. Then the chairperson shall not chair such committee. Now, what are the functions of nomination and remuneration committee? Now, audit committee deals with auditor. Then nomination and remuneration committee deals with directors and senior management. Now, what is a senior management? They are the members of core team. Okay, they are executive board of directors, excluding board of directors and one level below the executive directors. Now, what are the functions of board of nomination and remuneration committee? Is to formulate the criteria for determining qualifications, positive attributes, and independence of director. Then to identify who are qualified directors to become a director and who may be appointed in senior management. Then next is to recommend to the board their appointment and removal of directors and senior management. Then the next is the nomination and remuneration committee shall, while formulating the policy, shall ensure that the level and composition of remuneration is reasonable and sufficient. The relationship of remuneration to performance is clear and meets the performance benchmark. Then there is balance between fixed and incentive pay reflecting short and long-term performance objective. Then it is imperative, that is it is mandatory to disclose such policy in the board's report. Now we'll see stakeholders relationship committee. Now we'll see the section with respect to formation and constitution of stakeholders relationship committee. Then now the board of directors of the company shall consist of more than 1000 shareholders, debenture holders, deposit holders, and any other security holders at any time during a financial year shall constitute a stakeholder relationship committee, that is more than 1000 shareholders, stakeholders, debenture holders, and deposit holders. And the chairperson shall be non-executive directors. The objective of this committee is to consider and resolve the grievances of security holders. Then the next point is, in case of listed company, the formation, composition, responsibility and rights of stakeholder relationship committee shall be governed by SEBI LODA regulations. Till now, we have completed meetings of boards, powers of boards, and committees of boards. Now we shall look into sections related to loans and investments. Section 185, it provides the prohibition on granting loan, including any loan represented by a book debt, or giving guarantee or providing securities in connection with any loan taken by any person to director of the company, director of holding company, but not director of subsidiary company. It is director of company, director of holding company, relative of this 1 and 2, and firm, the director or his relative is partner. The firm in which the director or his relative is partner. Now, exception to this is when the company provides loans or guarantee or security to the person in whom any director is interested. That is, when can a company grant loan, provide guarantee or security to the person in whom any director is interested? The conditions are: the lending company shall pass a special resolution in general meeting, and the borrowing company shall utilize the amount of the borrowings in its principal business activity. Now, who is the person in whom any director is interested? First, it is private company in which the director is member or director. The second is body corporate, in which at general meeting not less than 25% of the total voting power is exercised or controlled by any director or two or more director, or the body corporate where the board of director, managing director, manager are accustomed to act in accordance with the directions or instructions of board or any of the director. Now, the provisions, that is the restrictions under section 185, does not apply in the following circumstances, that is, giving any loan to managing or whole-time director as a part of conditions of service extended by the company or pursuant to any scheme approved by the members. Then second, in company in which in its ordinary course of business provides loan or gives guarantees or securities, and in respect of such loans an interest is charged at a rate not less than the bank rate. Then the next is any loan made by holding company to its wholly owned subsidiary, or any guarantee given or security given in respect of any loan made to its wholly owned subsidiary. And the next point is any guarantee given or the security provided by holding company in respect of loan made by any bank or financial institution to its subsidiary company. There is a condition that this shall be utilized for its principal business activity by the subsidiary company. Then the next point is, in contravention of provisions of section 185, the penalty shall be on company is minimum 5 lakh and maximum is 25 lakh. And on defaulting director, the imprisonment can be maximum of 6 months. Fine can be minimum 5 lakh and maximum 25 lakh, both imprisonment or fine. Then the next is section 185 shall not apply to a private company. This is an important point, that section 185 shall not apply to a private company in whose share capital no other body corporate has invested. Point B is if borrowings is less than twice the paid up share capital or rupees 50 crore, whichever is lower, and such company has made no default in repayment of borrowing subsisting at the time of making transactions under this section. Also, Section 185 shall not apply to government company who has obtained approval of Ministry or Department of Central Government. Now, Section 186 contains the provisions related to loan and investment by the company. This section is applicable to all the companies, that is public as well as private company. Now, this section states that the company can make an investment through only two layers of investment company. That is, it cannot make investment through more than two layers of company. The exception to this clause is acquiring of a company incorporated outside India if such other company has investment subsidiaries beyond two layers. And the second is subsidiary from having an investment subsidiary for the purpose of meeting the requirements of any law or regulation or rules. But the exception, that is exception to this two levels investment is government company, banking company, NBFCs and investment company, that this four can make an investment through more than two layers of investment company. Now, the next clause we'll see is section 186 subsection 2, that is limitations or restrictions on the company. It states that any loan to any person or other body corporate, that is no company shall give any loan to any person or other body corporate, any guarantee or provide security in connection with the loan to any other body corporate or person, or acquire by way of subscription, purchase, or otherwise the securities of any other body corporate exceeding, that is the limit is exceeding 60% of its paid up share capital, free reserve and security premium, or 100% of its free reserve and security premium, whichever is more. That is, no company can give loan, guarantee, or security or subscription or purchase exceeding this limit. But if the company wants to exceed this limit, then prior approval of shareholders shall be required by passing a special resolution specifying amount up to which board of directors are authorized. Then there is a clarification stating that loans and or advances made by the companies to their employees other than the managing or whole-time director are not governed by the requirements of section 186. This clarification will be, however, be applicable if such loans or advances are in the accordance with the conditions of service applicable or in accordance with the remuneration policy. Now, the next is section 186 subsection 3 shall not apply in case where the loan guarantee or security is provided by the company to its wholly owned subsidiary or joint venture company, or acquisition is made by the holding company by way of subscription, purchase, or otherwise of the securities of its wholly owned subsidiary. Now, the next point is company shall disclose to its member in the financial statement full particulars of loan given, investment made or guarantee given or security provided, and the purpose for which the loan, guarantee or security is provided be proposed to be utilized by the recipient of the loan or guarantee or security. Now, what are the approval required in case of intercorporate loan or investment? First, it is unanimous resolution of board. Second is approval of PFI, that is public financial institution, if the term loan is subsisting. And the third is special resolution if the limits exceed. Now, in case of loans, the rate of loan shall not be lower than the prevailing yield of 1 year, 3 year, 5 year, or 10 year government security. Then no loan shall be given till the default is subsisting. And then the next is maintenance of register in accordance with the Rule 12 and in MBP 2. Now, non-applicability of section 186, that is this section nothing contained in this section shall apply to loan made, guarantee given, or security provided by banking company or insurance company or a housing finance company in the ordinary course of its business, or a company engaged in the business of financing of industrial enterprises or of providing infrastructural facilities. This is an amendment that it is engaged in the business of financing of industrial enterprise. It says this amendment has extend the purview of this section. Then the next is this section is not applicable to any acquisition made by NBFC whose principal business is acquisition of securities, then made by the company whose principal business is acquisition of securities, then shares allotted, then the next is made by the banking company or an insurance company or housing finance company making acquisition of securities in the ordinary course of business. Now, section 187, that is investment of the company to be held in its own name. That all the section states that the all investment made or held by a company in any property, security, or other assets shall be made and held by it in its whole name. But the exception is company may hold any share in its subsidiary company in the name of nominee or nominees uh, to ensure that the number of members of subsidiary company is not reduced below the statutory limit. Second is deposition of asset securities held by the company. That is, this point is exception to section 187. It states that nothing in this section shall be deemed to prevent a company from depositing with bank, being the banker, to collect any dividend or interest. Then second, depositing with or transferring to or holding in the name of State Bank of India or Scheduled Bank to facilitate the transfer. But the company is required to again hold the shares or securities in its own name within a period of 6 months. Then the next is from depositing with or transferring to any person any shares or security by way of security for the repayment of any loan advanced to the company or for performance of any obligation. Then the next is from holding investment in name of depository when such investment are in the form of securities held by the company as a beneficial owner. That is, we'll revise the 4 point quickly, that section 187 shall not apply in respect of collection of dividend or interest, facilitating transfer, loan or obligation, or as a beneficiary owner in case if the company transfers for this four matters. Then the next point is maintenance of register containing shares or securities beneficially held by the company but not in its own name. It shall be maintained in form MBP3. It shall contain the particulars and reason why it is not held in the name of company and the relationship. then it shall be maintained at registered office and be open for the inspection. Now, till now, we have completed meetings of boards, powers of boards, committees of boards, and loans and investment. Now, we'll come to the part related party. Section 184, we have two subsections in section 184. Section 184, subsection 1, and section 184, subsection 2. Section 184, subsection 1 states that every director shall, at its first board meeting he attains after being a director, or after the change, in case of change, at the first board meeting held after such change, disclose his interest in the or concern in any companies or body corporates or firm or other association of individuals in form MBP1, and this MBP1 shall be preserved at its registered office in for in the financial for it is made and plus 8 subsequent financial years. This MBP1 is not required to be submitted to ROC, and these interested directors or shall not participate in board meetings. Now, what does section 184 subsection 2 states that every director interested directly or indirectly in any existing contract or arrangement to be entered with the body corporate, firm or entity. First, he shall disclose his interest on the plain paper, even if made under section 184 subsection 1. That is, even if he has disclosed under section 184 subsection 1, still he has to disclose under section 184 subsection 2, and he shall not participate in board meeting. But in case of private company, the director, interested director, can participate after the disclosure. Now, when can we say that the director is interested? If in case of another body corporate, he alone or in association with other directors holds 2% of paid up share capital or is promoter, manager or CEO. And in case of a firm or other entity, he is a partner, owner or member. So, here we have completed clause 184 subsection 1 and 184 subsection 2. Now, in case of section 8 company, 184 subsection 2 shall not apply and apply only if, that is 184 subsection 2 shall apply only if transaction when a transaction is with respect to section 188 exceeds rupees 1 lakh. Now, in case of contravention of section 184, it is voidable at the option of company, and directors are liable to vacate the office under section 164 and imprisonment up to 1 year or fine up to rupees 1 lakh or both. Now we shall see section 188 related party transaction. Now who is a related party? As per section 2 subsection 676 of Companies Act 2013, related parties are a director or his relative, a key managerial personnel or his relative, a firm in which a director, manager or his relative is a partner, a private company in which a director or manager or his relative is a member or director, a public company in which a director or manager is a director and holds, along with his relatives, more than 2% of paid up share capital. Then next is any body corporate whose board of directors, managing director or manager is accustomed to act in accordance with the advice, direction or instruction of a director or manager, or any person on whose advice, direction or instruction a director or manager is accustomed to act. Now this both, that is clause 6 and 7, shall be applied to the advice, direction or instruction given in professional capacity. Then the next is in relation to any company which is holding subsidiary or associate of such company, or the subsidiary of holding company to which it is also a subsidiary company, then such other person as may be prescribed. Now, what are the related party transaction? It is stated in section 188 subsection 1. Transactions referred in subsection 1 are sale, purchase, or supply of any goods or material, then selling or otherwise disposing of or buying property of any kind, then leasing of property of any kind, availing or rendering of any services, appointment of any agent for purchase or sale of goods, materials, services, or property, then such related parties appointment to any office or place of profit in the company, its subsidiary or associate company, and underwriting the subscription of any securities or derivatives thereof of the company. Now, what are the approval needed for related party transaction? The first is board resolution shall be passed at the board meeting. Then second is audit committee approval if any audit committee is formed. And the third is ordinary resolution if the threshold limits exceed. Now we'll see what are the criteria, that is what are the limits beyond which we need the approval. Now, in case of the following transaction, if it exceeds the limit, we need the prior approval. The first transaction is sale, purchase, or supply of any goods or material directly or through appointment of agent. The limit is 10% or more of turnover or rupees 100 crores, whichever is lower. Now here it is goods, so we'll connect it with turnover limit. The second is selling or otherwise disposing of or buying property of any kind directly or indirectly through appointment of agent. The limit is 10% or more of its net worth. Now property it is a net worth. So 10% or more of its net worth or rupees 100 crore, whichever is lower. Next is leasing of property of any kind. The property which can be leased can be stock in trade or are assets. So the limit is 10% or more of net worth or turnover or rupees 100 crores, whichever is less. Next is availing or rendering of any services directly or through appointment of agent. Limit is 10% or more of its turnover in service or rupees 50 crores, whichever is lower. Now for appointment to any office or place of profit at a monthly remuneration exceeding rupees 2.5 lakh rupees. Next is remuneration for underwriting the subscription of any securities or derivatives exceeding 1% of net worth. Now, this all limits shall be computed on the basis of audited financial statement of the preceding financial year. Now, the explanatory statement is to be annexed to the notice of general meeting, which will state the particulars related to related party, then the name of directors of key managerial person who is related, then the nature of relationship, then nature, material terms, monetary value, and particulars of transaction, then any other relevant information. Then no voting shall be allowed by related members on such resolution. The next point state is where the director is interested, he shall not be present at the meeting. Then the next point states that the second, first and second provision of section 188 subsection 1 shall not apply to a government company in respect of contracts or arrangement entered into by it with other government company and has obtained approval of ministry or department of central government in case of unlisted government company. The next is passing of resolution is not necessitated in case of transaction is entered between holding company or its wholly owned subsidiary. Now, the related party transaction can be voidable at the option of board. Second, when can it be voidable? First is contract of arrangement is entered without obtaining the consent of board or approval of resolution. Then the contract of arrangement shall be voidable at the option of board. Second is no ratification by the board of shareholder at a meeting within 3 months from the date of on which such contract or arrangement was entered. Then the third, the company may proceed to recover loss in contravention of the provision of this section. Now, what is the penalty? In case of listed company, uh, every director or other employee who is involved will be punishable with the imprisonment up to 1 year or fine which shall not be less than 25,000 rupees but which may extend to rupees 5 lakh or both. And in case of any other company, they shall be punishable with a fine which shall not be less than 25,000 but may extend to rupees 5 lakh. Next is section 189, register of contracts or arrangement in which directors are interested. It states that maintenance of register of contracts or arrangement containing all the particulars of contracts or arrangement under section 184 subsection 2 and section 188. It shall be register shall be in the form MBP4. Then the register is to be signed and placed before the next meeting of the board so that it can be signed by all the directors present at the meeting. Then disclosures to be made by the director or KMP within a period of 30 days of his appointment or relinquishment of the office in, in relation to section 184 subsection 1. Then register is to be kept at registered office, and to get the extract of this register, the person, the member has to pay a fee which can be maximum rupees 10 per page. Then the register is to be produced at AGM and it shall be open and accessible during the continuance of the meeting, and even proxies have the right to inspect the register. The exceptions to section 189 subsection 1 are for the sale, purchase, or supply of any goods, material, or services if the value of such goods or materials or the cost of such service does not exceed rupees 5 lakh, then it shall not be maintained in, registered shall not be maintained in this case. And the second is by the banking company for collection of bills, that these are all exception to maintenance of register. Then the next is section 190, contract of employment with managing or whole-time director. The maintenance of copy of contract of employment shall be kept at registered office. It shall be in writing, and if it is not available, the copy is not available in writing, then the written memorandum shall be setting out the term shall be available. Then the next is inspection of this contract shall be open without payment of fees, and in case of default the company shall be liable to penalty of rupees 25,000 and officer to 5,000. This provision is not applicable to private company. The next is section 191, that is payment to director for loss of office in connection with transfer of undertaking, property or share. This provision of section 199 is applicable to all the companies. It is not applicable in case of managing director, whole-time director and manager. Then the next is requirement. That is when this section shall be applicable. That is office of director is lost and he is not authorized to receive any compensation from the transferee company or any other person, but he may receive the compensation for loss of office if the members approve in general meeting. But if they have not approved and still the director has received the compensation, then such compensation shall become refundable to the company, and until it is refunded he shall be holding it in the trust for the company. Then the next is section 192, restrictions on non-cash transactions involving direct. Section 192 is applicable to all the companies. Now, what is non-cash transaction? It is when director of a company or its holding or associate or subsidiary or person connected acquires a asset from the company, or if the company acquires asset from director of company holding or its associate or subsidiary or the person connected for a consideration otherwise than cash, then every such contract requires prior approval of members by a resolution. Then for this prior approval, a notice of general meeting for passing the resolution or the notice of general meeting shall be given containing the particulars of such contract, of such non-cash transactions, and value of asset which is calculated by the registered valuer of such arrangement. Then the contract where the director of the holding company, if the contract is with director of holding company, then approval of members of the holding company shall be required. Then in case if there is a contravention, then it is voidable at the option of company unless the restitution is no longer possible and the company has been indemnified by any other person for any loss or damage, and B is any rights are acquired bona fide for the value and without notice of the contravention. The next section and the last section is section 193. It states that the one person company shall have a contract in writing with the sole member of the company, and if there is no contract in writing, then the memorandum or the minutes of first board meeting held after the contract shall contain the particulars. Then the company shall inform the registrar within a period of 15 days after of the date of approval by the board of directors. So here we complete the revision of this topic. I hope you have liked the video. I'll leave the link in the description for the notes. And yeah, thank you for today.